Robert, let's start today with the impact of this pandemic on the global economy.
Yes, Susan, we're seeing some of the purchasing managers indexes globally telling us what we have widely expected, and pretty strong contractions in Europe, in Australia, and Japan. And then we're also seeing the same type of data in the U.S. durable goods report. New orders for durable goods from March down significantly. No surprise at all, in line with the expectations of a pretty good drop in GDP. We're down over 14% for new orders. We're down 4.5% for shipments. So we are going to see a pretty good contraction in second quarter GDP in the U.S.
Robert, we got new data this week on housing sales, both new and existing. What do the numbers look like?
Well, it's the same story there, with new home sales down 15% or so, existing home sales down about 8.5%. Mortgage applications have been light over most of the end of March into early April, and so it's no surprise at all that the social mitigation techniques, people staying in their homes, feeling less secure about their job, that's going to have a big impact on the housing market. I don't expect the housing market to completely collapse by any means, but I am expecting the volume of transactions to be pretty light, at least through April and probably into May, maybe not normalizing until we get into mid to late summer. And then, like everything else in the U.S. and global economy, everything else is going to depend on does the rate of new infections subside in the summer? Does it come back in the fall? Do we have effective treatments by the fall or by the year end? All that is up in the air right now. And so we're at a place where the economic outlook is tied intimately with the outlook for the coronavirus pandemic.
Robert, the oil industry has been hit really hard. What is your outlook right now?
Well, we did get the deal from OPEC, bringing about 9.7 million barrels per day off production. That gets phased in through May. But given the scale of global demand destruction, it is safe to say, a metaphor I've used a lot, the world is awash in oil. And we are simply running out of places to store it. And we ran into some technical issues going into month end, and that brought the futures price for oil into negative space briefly. It's come back, but still, the futures price for West Texas Intermediate, the front month contract, still below $20 a barrel, 17 and change last time I checked. And so that's still a very, very weak oil price. It's going to have a huge impact on capital expenditures in the U.S. oil industry, on drilling activity, and on the economies of states that depend on that. I'm sitting here in Dallas. Texas is obviously the center of the U.S. oil market. It's going to have a big impact on the Texas economy, Oklahoma, Louisiana, Colorado, Wyoming, Alaska, all the states that have a pretty significant energy sector. I should not leave out Pennsylvania as well. So lots of state impact from this.